Liquidity.
Good morning, guys, and welcome to today's episode of Market Check, brought to you by BB. Reminder that there is no second best daily YouTube live stream to talk about these markets. Welcome, guys. Welcome. Happy Thursday. I have to make the joke because it is Thursday. It's a prerequisite. I always think about Thursday almost as like the pseudo Friday. So I always enjoy Thursdays. I hope you guys feel similarly. We've had a bit of a boring week of price action. Some would consider that to be a good thing. A nice little mental reset after months and weeks of some pretty righteous speculation. But yeah, we are coming into the end of the week. I hope you have all stayed safe, had a great week. And yeah, let's go ahead and get into it, guys. Right, I'm Snorlax. You also know me as Tommy. I'm joined by Max, Jackus, and of course, Dr. Will's Outlook, who is coming at us with yet another alias this week. So I'm looking forward to hearing from this one as well. But real quickly, guys, before we start cooking, before we start sharing that big, juicy alpha, you know what I'm going to ask you. You already know. We always appreciate when you guys can smash that like button for us. And if you don't want to, that's your prerogative. We will probably end up responding by showing lean hog futures and even the soybean chart. But let's get that out of the way now so that we don't have to do that, so that we can just cook you guys alpha throughout the entire show. But yeah, as far as the markets go, right? I mean, the S&P is giving a nice response off its local low today. I mean, up about 0.5%. Bitcoin as well, up 4%, ETH up 3%, a lot of altcoins rebounding as well. But really, what I'm noticing today is the bounce most easily expressed through majors at this point. If the bounce can sustain, we'll obviously see the risk taking once again flow back into altcoins. But for now, right, you're seeing that bid come in on Bitcoin and ETH specifically, which I think is ultimately a healthy thing, especially that we are sitting on range lows. We talked about Bitcoin dominance in relation to where Bitcoin is on range lows. Obviously, altcoins have been through a pretty tumultuous last 2 or 3 weeks, but you have to zoom out. That's something that we've been painting a picture of, and altcoins on a higher time frame are still respecting their trends, although a little bit more volatilely than Bitcoin, right? Because Bitcoin is another thing that we've talked about. Bitcoin's structure just looks absolutely impeccable still, even relative to altcoins. And as long as Bitcoin is holding its range lows, that's going to remain the case. Altcoins can do whatever in between, but Bitcoin specifically, and to a lesser extent, ETH, right? Like if we form that second bottom here on ETH, I would say the structure looks very constructive. Actually, not quite as constructive as Bitcoin, right? But still assets that look much better from a structural standpoint on a higher time frame. But Bitcoin especially, I mean, it's still the king, and I feel like the last 2 weeks have really highlighted this importance and the fact that it is still the king. But that doesn't mean that we're not probing the inflection point for when that rotation is eventually going to shift to altcoins. That's something we talked about a lot. And yes, there have been altcoins that have pumped throughout. I'm not ignoring that. I'm never going to say that there haven't been alts that are outperforming Bitcoin, because there clearly have been. But the overall dispersion of the altcoin market, the breadth of the altcoin market, I had to say it in the first 5 minutes of the show. I had to say it, but the overall breadth of the altcoin market, once that expands, that's usually a little bit more indicative of our quote unquote alt season. But yeah, guys, I mean, Bitcoin is a little bit adherent to whatever the S&P is going to do. Obviously, you've had a pretty interesting last week in the equity market, just kind of relentless selling on the back of market uncertainty, whether that's from a loss of momentum on a technical level, or the war fears over in the Middle East, or both. right? I mean, it is causing some weakness that we're seeing in equity markets, but the put to call ratio is starting to get pretty high, and the VIX still has not spiked. So I do think that we're probably getting close, at least from a time standpoint, right? I always like to highlight that I think we're close to a bottom or an inflection point from a time standpoint rather than price, because I don't, price is much more difficult to predict, but I do think that time is a little bit easier to kind of put your finger on. I do think we're close to that inflection point on equities, just based on the way the positioning is beginning to get increasingly skewed towards the short side. As well as the fact that the dollar is also about to roll over in like 2 or 3 weeks. But we'll probably talk about that, I'm sure, on this show later as well. I've been rambling. I want to open up the floor for you guys. Welcome, welcome, welcome. Happy Thursday to the panel, to the audience. Would love to know what you guys are seeing in the markets, the S&P, Bitcoin, everything in between.
Hey guys, first of all, just as we discussed yesterday, I was saying that we are, guys, in a range. Do not panic at range lows. The people have been panicking regardless. And guess what? The market bounced once again.
Who could have foreseen?
Who could have foreseen?
Who could have foreseen?
I heard the word weakness, and I just instantly went to the word testosterone when I heard the word weakness. And I think that's what we lack here in this market is a lack of testosterone. A bunch of people who pretend like they know what they're talking about.
Because we keep showing them soybeans, Will.
Oh, now I get it. Okay, that makes sense. That does make sense. I think I need the Satoshi complaints department. I need a secretary. I was told 50K. We're now at 64. I'm pretty upset. I didn't get my entry. Everybody tried to blast me yesterday because it was 59,990 and told me I need to be humble. Sure, enjoy your $10 deviation into my range of where I said we weren't going. Enjoy it. I hope you bought.
Who wants to FUD the dollar? Do we want to FUD ETH or the dollar first today, Tommy? I'm going to let you decide because we know they're both going to get FUDded.
We'll FUD the dollar first because I think it's more applicable. I think we've got about like 2 or 3 weeks of a rounding top on the dollar, and then it's going to roll over pretty hard. But
do you see it making a deviation or a stab above the previous high? I have it up on the right side here. Do you see it moving above this 107.50 level, or do you think this will suppress it?
Maybe not quite the high, but I think we'll trade a little bit deeper into that consolidation. So like maybe a cleaner 107, a little bit above it. I'm not quite sure if we make new highs on the dollar, but I do think generally speaking that you're going to see another top probably form here, and double tops in a range. If you know how price action tends to work, if this double tops, I mean, the rollover is just going to be massive.
Especially after, I mean, like, okay, let's contextualize this a little bit. Not that it even needs it, but let's do it. Okay, move up aggressively, right? Like this was insane, right? Incredible strength out of DXY. If this is all a complacency shoulder right here, do you understand the type of move that's coming to the downside if this is all just one giant complacency shoulder that ends up failing? Because we've basically been, if this is a complacency shoulder, distributing here for 523 days. Do you understand that if this does break to the downside, it's not going to go to 99, okay? It's literally going to go back to about 90, maybe even lower. Like you don't spend 500 days distributing on a drawn out complacency shoulder for a little tiny micro break. That doesn't happen. Similarly to how we would even, we've talked about this before, right? Let's take a look at,
Not only distributing, but if you pull out Euro USD, it's accumulating.
It is. And I was just going to show this real quick. It just like when ETH broke out of this accumulation and it had been here for 500 days, you don't get a quick little break to the upside. When you spend 500 days reaccumulating, the breakout is huge. Just like if you spend 500 days distributing, the breakdown will be huge. So I'm just saying, guys, if we are bearish DXY, also we have to look at it this way, right? This is DXY right here. I'll make this green. Gold and DXY historically have a negative correlation to one another over, a long period of time. Like there's periods where they can sync up a little bit, but usually they diverge from one another pretty good here. So DXY down below, gold up top. You can see that they move opposite of one another. Gold is breaking out right now. In my opinion, gold is just kind of leading and telling you what's about to happen to DXY. It's just the opposite. It's just gold hasn't caught up, or I'm sorry, DXY hasn't caught up yet. Like you're about to see this move down on DXY because you're going to see this on gold. So I think there's just a lot of things pointing to the dollar literally about to nuke. And then, of course,
Yes.
contextually, it makes a lot of sense with the Bitcoin halving in like less than 2 days. We're in a Fed pause, which is typically good for risk. And when risk rallies, DXY typically trends down. Obviously, Jack has just mentioned Euro is in a reaccumulation period. Like let's look at Euro USD. All right, oops, that's not what I wanted to do. I wanted to put that on a new pane. All right, here's Euro. Here's Euro USD.
All
Change
things
this here.
form that pattern, Max, before they die. I have a chart I wanted you to compare to all these when you get a chance once you finish cooking.
That's true.
Absolutely. So
They tend to die.
look at how these are, like, look at this, guys. Look at this. So this is DXY, and I'll put this in green, and then I'll make the candles green just so nobody can get confused. And then we'll make the Euro USD pair blue. And Euro. It's fine. Look at this. Like this to me, this feels obvious. Like this feels like, this feels like your base. And then of course on the opposite side, this feels like the area that's not going to give, So it's like, what are we expecting here? What are we expecting here, guys? What are we doing here?
So there's a chart that actually fits right into your narrative here, Max. It's actually, if you could pull up U.S. oil and look at it just before it went to zero. Same
You
exact
want it
pattern.
overlaid with these or a new chart?
Just throw up if you could put up a new chart, and it's literally chart out before it went to zero.
Didn't it go, are you talking about when it went negative?
Yeah. You get these consolidation ranges that basically more or less on a high time frame would be like it would almost be like a failed shoulder, right? These consolidation ranges almost act
Are
like a
you
failed
talking
shoulder.
about this, Will, right here? Like this is
Yeah.
what we're doing and we're about
Yes.
to nuke?
Yes.
I
That's
mean,
exactly what I'm
look
talking
at
about.
that. I kind of see it. Like, look at this. Do you see this? I see it.
I mean, the nuke is coming. The nuke is coming.
Yeah.
The only question is, do we like see higher here on DXY first or no? It's only going to be temporarily, but you never in history you had gold rallying higher and DXY rallying higher. They work in inverse correlation.
So it's almost like one of two things are going to happen. They're going to print us through the floor, is one scenario, or the dollar's just going to lose that much value in the world. And I would arguably say they're going to print us through the floor. And if they're going to print us through the floor, imagine what it does for assets.
Well, they kind of have to print at this point, given the look of the reverse repo market, right? Otherwise, how else are they going to stimulate the market?
Yeah. Listen, the only reason the DXY hasn't dropped yet is because they decided, because the consensus was at the end of 2023 that there will be very quick rate cuts in 2024, probably January or March. That was the first consensus. And then they said, all right, we are not pausing just yet, and we will stay rate paused for longer. So that's why DXY is ranging. But the moment they will start cutting the rates is when DXY will start to go down a lot again. So it would have already happened if they were to cut earlier, but now it's just kind of ranging. Unless Like the only DXY scenario for all the DXY moon boys is you would need Fed to start raising the rates again. Until you get that, this is a range. It can get prolonged. DXY can go temporarily higher because of the war fears, but essentially, rate cuts will come. Gold will keep on rallying because it just broke out of 12 years of big cup and handle formation to new all-time highs, and you have central banks around the world accumulating the most in modern history. So it's a no-brainer, but people don't have patience for it. They are stuck on
Jackus, let me
daily
ask
time
you a
frame.
question. So you think that the DXY is going to hold up until the Fed starts to cut rates, but we know that typically when the Fed cuts rates, it's not a good thing for risk because of the underpinning of why they're cutting rates. How do you reconcile your bullish stance with the idea that as long as rates remain elevated and hold where they are in the US, DXY is going to hold up? How can risk rally with dollar strength or DXY strength?
So first of all, rate cuts can happen in many ways, and if they are very slow and gradual, there doesn't have to be a shorter term problem. Like for example, the problem can be interest payments on the U.S. debt, for example, for the U.S. government. So they will be dropping the rates simply because of that, and that doesn't have to be a credit problem. So it will depend. Like, are they cutting the rates like 25% basis points, or are they dropping like they've been hiking 0.75 basis point because there are credit problems? Sure, that would be shorter term pain, because rate cuts in that scenario, if you get credit problems, then you're gonna get very sharp rate cuts, and that means very short-term pain, like '08. But longer term, that means that you will have cheaper access to money. That means more money will start flowing um, to low caps and so forth. So it will depend a lot on the way they do it. And if they just, going to gradually start cutting rates without any credit problems, then it's bearish for DXY, and it doesn't have to mean that the markets will crash.
Well,
And I
you
think there was actually wait, sorry, Will, but let me actually pull out a Fed funds rate, and I think there was a great case in in the year 95, and back then you had the rates went from 3% to 6%, which is 100% higher. And in the year 95, they stayed rate pause for a little, and then they started to cut slightly, and nothing happened all the way until the year 2000. So that's 5 years.
I
yeah,
was looking I
oh,
think
go ahead.
I think the dollar monthly as well looks just as bearish as I think this is like the daily or the 3 day. If we're to look at the dollar monthly and just invert it, that to me looks like it's about to go to zero here pretty soon. Not that the dollar is going to go to zero, but like if I were trading it like a shit coin, it looks like it's going to the freaking moon.
Here you go. I even inverted the colors for you.
Yeah,
Yeah.
I think this looks very much like oil. I really think that the dollar looks like oil, which means if it looks like oil, it might play like oil, and if it plays like oil, it's like I know when we say the word zero, it's just being a little bit facetious, but it's just the reality of things. It just means the dollar's going to tank pretty hard. I think you also have to look too, like and I spoke on this too yesterday. Jackus was, I stated to people, I was like, once rates start getting cut, people start borrowing more money, and that stimulates the economy. Borrowed money is what keeps the world rolling, right? Borrowed debt is what keeps this train moving. And so the US will always incentivize debt borrowing. And I think, like, in that scenario, cheaper debt, and then you've also got stimulus that's continuing to play out with Congress. They continue to keep on just passing bills for trillions of dollars of spending bills. Like, what the hell? What describe to me what a spending bill is, right? You're literally just calling it a spending bill. You aren't saying, oh, the Class Act to help schools. You're not saying the Road Repair Act. Like, you're just saying, oh, this is a spending bill. We need 1.3 trillion for what? For what? So we can spend it. It's a spending bill. Vacations, whatever. And look, I'm being a little bit facetious with that. But at the end of the day, the whole point is that they're continuing to stimulate the economy. We can take cuts. I think there might be a knee jerk reaction initially, but systemically, like where's the issues? I would love that anybody to answer that, because when we were at the bottom, the banks collapsed, right? And what did they do? They came in and basically floated the banks. I don't care what anybody says. That's stimulus. I don't care if it's borrowed money and they have to pay it back. It's stimulus because those banks should have collapsed. They kept them from collapsing. They floated them until they could afford to do better, and now banks are not in a scenario, at least as far as what we can see, where they're going to collapse. So now, like, it's like, what is your black swan event that is going to cause markets to collapse on a cut? I don't know of one other than people just reacting because they react, right? And then at that point, you get a little bit of pullback, but then the market continues up. So I mean, if you guys could think of anything better, I'm all ears. But I can't think of a single thing right now that would drop markets, even with the knee jerk reaction to a rate cut.
Here you
I
go.
think the immediate term liquidity conditions are somewhat of a concern, but they're only a concern if we don't get any certainty in the Iran Israel stuff and we keep dropping in equities, which it doesn't really look like the equity market wants to keep dropping on this uncertainty. Obviously, we're up like 0.5% today, or over 0.5% today. So we want to see how we close the week. But yeah, I would say the big thing for me is it's not even the war. I think it's more the liquidity conditions that we're seeing as a result of the reverse repo market, as well as impact from TLT currently dropping. But I don't think the TLT is going to drop too much lower. And I have to imagine the only solution for the reverse repo market in an election year is that they're probably going to eventually print more money. So it's like it's bearish now, but I do think it's ultimately going to be a huge tailwind for the market, whatever it does in the short term. So it's like the biggest bearish catalysts are eventually going to be bullish catalysts. It's just a question of when.
There is one more chart that you can match up. Also, Max, you could match up the 2 year with with the dollar, and what you'll notice is when the 2 year is up, the dollar's down. Dollar's up, 2 years down. 2 year looks topped. So to me, I would say, in that scenario, we're probably going to see the dollar roll right back down again. I can't see rates going up beyond 5.36 or whatever it is percent.
Yeah, I didn't see rates going higher either.
Dude, if they hike rates further, it's completely over. Like, I'm not even joking. Like, if they surprise us with an additional 25 basis point hike, it is complete. Like, exit all markets. I'm not even joking. Like, they can't. They can't do that.
Would that really be an exit all markets type of thing, though, if they hiked rates like one more
It
time?
would be a black
Yes.
swan, I think.
I think
Yes,
Temporarily.
yes,
I think
it
would be.
would.
I think it
Would
would
it
be.
really?
Yeah.
Yes.
Well,
Yeah.
I
It
wouldn't
would.
know.
It would be exit all markets immediately or enter all puts immediately. That's what it would be.
Tommy, I think the tapering should offset the reverse repo going to zero, right? Because Powell said that they're going to slow the roll off of their balance sheet, so that slowing down should offset RRP to zero.
That makes sense. I just have, on a technical level, I've always said I think TLT reminds me a lot of an inverted version of Bitcoin's 2021 spring top, which would imply TLT eventually trading lower in Q3 and Q4 of this year. But that's just something that I am personally tracking. I have no opinions on yields or what that would do to the market, obviously, but I'm just tracking patterns and tracking TLT. And if TLT, I have it bottoming near here, getting relief into July, and then trading lower into October. So we'll just something to keep tabs on. But that's just purely based on my technical opinion on treasuries, obviously nothing else.
The thing is, too, is like somebody brought up inflation will keep going, blah, blah, blah. Look, we all know inflation's not going anywhere. Everybody's aware. It's not about inflation actually existing or inflation actually being at a number. It's about whatever they want to manipulate on the books to make it appear to be lower than what it is. And that's all it is at the end of the day. The best way to track inflation is U.S. oil. It's literally the best way that I've seen. And so I utilize that pretty heavily.
We got it up right here.
It looks close to topped. That almost looks like a failed shoulder.
What about copper, Will? You like to use copper too? Copper can be pretty solid.
Well, copper is it's more affected by, and I know this from the construction side. It's more affected by the economy too. So, is the economy doing well or not doing well? Because copper specifically is one of the highest used metals out there when it comes to construction and buildings and housing and everything else.
I mean, copper and oil can sometimes, most times, be leading, right? At least for
Yeah,
CPI.
I'd say copper is more of a leading indicator of economic downturn, and oil is more of a leading indicator of, is inflation about to ramp up really hard?
Let's
That's
take
the
a
way
look.
I utilize them, right? Everybody can use them however they want, but like I know from construction, copper is one of the most used metals out there in like economic terms. In such case, it can thrive even through a downturn market, but it will be the first one to nosedive against every other metal.
I mean, just looking at this chart right here, we have oil up top, copper in the middle, U.S. inflation down here. I mean, copper's definitely moving up a little bit, right? Like let's look at like how they're both leading, right? So you can see this. I'll make this line a little bit more visible.
The
I'll
oil
make
to zero was a big one. That was a big one.
Well, this is, I mean, look at copper and I mean, look at copper bottoms, oil. I mean, weird black swan goes to zero, but both of them led this, this CPI push up right here. Going back a little bit further, let's see here. Both of them bottomed right here, and they both bottomed before. They both
Now,
bottomed before.
Yeah,
now
but
add soybean to the equation.
Oh, I
look.
should add soybean to the equation. All right, I can add soybeans.
No, you should have just added to the existing ones there that you had
I,
before.
I was just gonna say. Oh, go ahead.
They deserve it. They deserve it. We're gonna go to the soybean chart. Okay, guys, we are now looking at the soybean chart on the 10-second time frame. And pop quiz, does anybody know why we are looking at the soybean chart on the 10-second time frame? Does anybody have a clue? Any guesses? Anybody want to take a stab at it? Why are we looking at the soybean chart on the 10-second time frame?
It's because of the profound impact on macroeconomic conditions, Max.
On the 10 seconds.
That's about to bounce.
It
That's
is
about
because
to
of
bounce
it's
into the
because
trend
of
line, and then it's going to put one more low in and then bounce very hard.
you understand this, guys.
This
The
is
reason
like
we're
the
looking at the soybean chart on the
lot
10-second time frame is because we have 334 people watching on YouTube with 112 likes. That means that only about a third of you have expressed your approval and your liking in a physical form of actually liking the video. Guys, if you are enjoying the content, do us a solid. Please consider liking the video. It really helps push the content. Again, we wouldn't ask if it didn't make a big difference. Guys, all we need is for you to take one brief moment out of your day and hit that like button. And again, then we can stop looking at the soybean chart on the 10-second time frame. Oh, we're nuking, guys. Look at the soybean chart. Literally just nosedived. Oh my God. Look at that thing.
Tell me the soybean 10-second chart doesn't look like the S&P from like September and October.
Tommy, you need to sleep.
I know. Hey, I got a great night's sleep last night. That's probably why I'm catching little things like that today.
That makes one of us. I haven't slept in years. All right, let's see what we're at here. 155. All right. I'm tired. We'll go back to the discussion.
So
Yeah.
I was actually just going to say real quick, Max. I was talking more about not really the lows because the lows can match. Look at the spike high on oil before that drop, that last one you picked out there, and then look at how copper's topped and just kept ranging while oil just ramped hard. No, that one and the one prior to that.
Like here?
The other red line to your left.
Right here.
Yep. Look how much higher oil continued to run while copper stopped pretty much and ran sideways.
Kind of similar to this over here, where we see oil
Yep.
spike, copper distributes, and then CPI, or like U.S. inflation year over year just kind of like grinds up and then drops.
Add gold there too.
Add gold onto this.
Yeah.
Fine. I
soybean.
will add gold onto this. Let's do it. All right. Here's gold. Oops. All right. Gold.
Oil is the biggest boom bust type play, right?
So what I'm seeing about to happen right now, Jackus, is this. Is that correct?
I think we are just getting started, to be honest. Like we are not even there yet. That will be like maybe in like 3-4 years when we get there to the blue.
So, okay. So you're thinking we could be like right in here somewhere.
Even earlier. Like this cycle is just beginning and it's going to go for the next 8 years at minimum.
And I mean, there's such an obvious negative correlation between DXY and gold. Like if you think gold is going to go to 4,000 or 5,000 an ounce, DXY is going to crater, man. DXY is literally going to zero if that happens.
Yeah. Yeah.
He just goes,
DXY is
yeah.
going to zero.
Yeah.
Well, the funny part is too is that same gold thought process. You could see oil tracks really hard up to the upside up there, following it, and then basically trade sideways from there. And you end up in this like really high inflationary environment for a long period of time. And I think that's kind of where we are now, right? Like if you were to take that oil consolidation right after that red line where you basically ran up the first one, you ran up, you ran down, and then you were consolidated sideways. Take that range and literally just pull it sideways with a box. Yep, you found it. That support you were just looking at on oil.
Right here.
Yep.
What do you want a fractal?
Yeah. So that's what I think we're playing out right now. And we'll have a spike much later, kind of like what Jackets is saying, where it'll basically spike up really hard again.
So like something like this will?
But after a drop off. Yep.
Right. Well, you think that oil is going down like that after?
After.
I mean, this is out in 2028.
No, listen, this is not happening.
Well,
show me a chart then, Jackus Cook. Let's go, chef. I'm hungry.
It's ramping up into the high there, right? Like it's not going to be that far from all-time high.
No, it's going to a new era of repricing. The commodities are. So all of this box that you see on oil, being like 40 to 150 bucks, that is going to be the old pricing. The new pricing for the next 20 years is going to be 200 to 300 for oil.
I don't know about that, man. That's
unaffordable. I would love to see a chart, Jackus. I really want to see it, brother.
Wages would have to increase significantly, or everybody's on the streets.
It always happens every once in a while.
But it's for a short spike. Look at all the previous times.
Not short spike. No.
We just outlined all the spikes. Were they like a 3-year span, 2-year span?
Oh, he Tommied me. He just completely Tommied me.
You don't even call it out. You just do it.
Plus, we just spiked too. On top of that, we're now in the failed shoulder era.
Listen.
Nah, bro. We ain't going that high.
We are.
No.
Why not?
Because you got to think all goods are affected by oil. They will bomb another country and steal their oil if they have to.
I don't know what happens, but we are going higher.
Absolutely can't see that.
Okay, Jackus, what does that mean for DXY if that scenario happens? What does that mean for gold? What does that mean for Bitcoin? Let's talk about it.
All right.
Because we're not actually trading oil, but we can use oil to potentially position in other things we are trading. So what does that mean for all
Exactly.
this?
So for Bitcoin, that basically means higher. All right. And what it means is that whenever you see DXY, whenever you see oil ramping up, you see DXY just shutting, just absolutely wrecking. All right. And the oil going this way higher, just like all commodities are moving to this era 3. And every once in a while, they get repriced because of some world problems. Then you get the new stabilization for the next era. Then there's another problem coming up. And then you get another stabilization. And then you get another repricing. And it will always go like this because you keep getting, you keep getting QE. Like the QE is a new term, quantitative easing, but they've been always doing QE. It just didn't have that name, but they've been always increasing the money supply since the very existence of central banking, basically. And you always get that. You always get, again, this is DXY. Whenever DXY goes up, the commodities just die. And whenever commodities go up, right, and it could go again, you can go era 1, era 2, and then where's gold heading? Well, era 3. And it doesn't matter if you pull out cocoa or orange juice or anything, you can pull out,
Soybeans.
or soybeans. I mean, yes. I'm not joking. That's why I told
No,
you
I
this
know.
is the
I know.
soybean.
It's all commodities. It's everything.
Look, on this scale, I think it looks a little more reason. I'll tell you this. Look, if you increase oil to that degree, then at that point you're basically looking at systemic risk, right? Because your housing prices double because you have
but
gas.
Will, as long as you own assets, then it doesn't affect you because
Absolutely not,
because
because
the
then nobody can
assumption
get assets.
because the assumption would be then S&P 500 and crypto and everything just goes crazy, right? So if
But
you're invested, you're fine.
then you're going to see the biggest crash you ever saw in your entire life. Like probably
Study
the biggest crash
What
you'll ever
crash?
study
see
David
in your
Hunter.
lifetime.
Study David Hunter.
Well,
Wait,
I can't
the
see.
Study Koosh.
I
the
can't see.
the,
One sec before
the,
you
X,
continue.
the
I
XY going down is bullish for the market.
it is, but like oil going to that degree affects everything. Like your
Yes,
clothes are more expensive by
yes.
significant numbers. Like you're talking about paying Gucci prices for like some Wranglers. Your cars are extremely more expensive, right?
What does that even mean, Will? Like Gucci prices for some Wranglers? Like
It means
jeans?
that like you're gonna pay a shit ton for some jeans, man. Like people use those for construction. Those people make like 80K a year, 70K a year. They
Max,
don't make enough.
God.
yesterday, Will was like, the bears are so soft that they take Viagra and they can't get it up. That's legit what he said yesterday.
Dude, I watched for a second and I heard Will say something like, I'm not going to repeat it. He said it's the opposite of prison. Does anyone remember what he said yesterday?
The opposite.
He said it's like you only enter, you never exit. It's the opposite of prison or something like that. Dude, I turned the stream off when I heard that. I was like, I can't look at
It's a family show, man. It's a family
Bro,
show.
it's not a family show because you're on it, Will. This is not PG, man. This is no longer PG. I'm sorry. Keep going though. Keep going. You were saying.
Yeah, and anyways, listen, the XY going up, the commodities repricing higher, and stocks not doing much in the decade. Then it's commodities not doing much, but stocks rallying. So what you want to do essentially, if I were, let me actually close all of these. And let's do gold. And I'm gonna show you the biggest trick you will ever see. All right, and then let's add. Let's actually, we have to do like this, and then we're going to go. Let's do gold. All right, or let's do SPX. Let's do gold.
That breakout is it's beautiful on gold. It doesn't get much prettier than that, honestly.
Who could have foreseen?
Jackus, you had some tweets when we were down at 1800 saying that that's the final dip. I remember it. We have video on the show as well. We could go to the date that we bottomed on gold there recently. We had a market check episode, and I remember you being like, "This is the dip. Like, this is it. We're bottomed. We're going up from here."
People don't remember. They only remember the last week. You are only as good as what happened the last week.
Yeah, but I do remember, and we have every single clip saved, so we got it. Just go to the date that gold bottomed, and then go to the market check episode from that day, and you'll see. We had a discussion about it. I remember it. It was live. But anyways.
Listen, guys, this is the ultimate hack you want to do. So first of all, you going to get actually let me go as SPX. I'll just I have no idea what these are. Right. So you get a bull market, all right? You get a bull market, and then what happens? You anticipate the decade of commodities. So what you do, you go and you buy commodities.
But why do you?
Instead.
But why did you anticipate there a decade of commodities? You know, like why?
Yeah, but like because of like this would be a long discussion, but
yeah.
similar things to why we are expecting it right now. I would say, just to put it short.
During that time, there was high inflation, like there was, last year in the 70s.
Yes, and there were also other problems. All right, and then you expect kind of that stocks had enough pain. They are very cheap, and what you do? Wait, what? Oh, shit.
I don't think you can fractal the middle one.
Yeah, you can. I'll fractal just this one. Luckily, I pulled out the same chart. So what you do is that you buy this one. Then you anticipate that, hey, gold is super cheap. So what you do, you buy gold, and you probably get where I'm going with this. And then you buy SPX. And
so
then
it's like all you have to do over like every 5 to 10 years is just full portfolio shift between stocks and commodities, and you're just hacking the market.
You are hacking the market. You are essentially in a forever bull market. If you understand this, you are not
for now till they switch it.
What do they switch?
No, I said for now you can do that until they switch it one day.
Well, I don't know if they can just turn it on and off, right? As long as we need commodities to fuel our economy, and as long as we have debt, which is accessible through borrowing and interest rate policy, I don't think they can just switch it on and off.
Well, I don't really mean like switch it on and off as much as I mean like, eventually they're going to see that there's a pattern, and they're going to try to somehow shift the pattern to be
the pattern the pattern goes to Bitcoin. The pattern is Bitcoin. That's the different pattern. Is that
that's a pattern very few of us know.
Up until recently, Bitcoin hasn't been a part of this equation that Jackus is highlighting, but now suddenly Bitcoin is. So that throws a curveball at all of this.
The pattern is that what is happening in the markets right now has been happening 100 years ago, and then 100 years ago before that, and then 100 years ago before that, and it will be happening the 100 years, you know, from now, because the markets are, markets. People have the same psychology, emotions, and they will keep on repeating. I can give people the exact same charts as I did between Nasdaq and Ether at the very bottom. Not only they've been the same charts, they also had the same fucking numbers. Like for the top at .com bubble 4,800, the top on Ether the same, and then people will still say no, this will not work this time, and it does work this time, and then you can do that again, and people say no, this time is different, and then it works out the same. So
Isn't that what they're saying with crypto and Bitcoin when they're saying this time's different, black swan again?
yeah, I'm just bullish on people mid curving everything. uh, but yeah, listen, this is the ultimate hack that you wanna utilize for the best, and this is where I think we are right now, where you quite clearly.
I was just looking for Big Sal because he's been telling me my alpha lately, and I haven't seen him in the comments section. Tell me how we're going to 50K today.
Study Big
Study
Sal.
Big Sal.
This has been the most obvious breakout in history. And do you know what? The retail and institutions are so underallocated to gold right now. They are only beginning to realize, but most people, because like the investors of nowadays have been born when gold really did not do anything. Most people cannot think this like so much in the past. Most people are only able to like work from a month to month basis, some year to year, very rare decade to decade. But most people will say, hey, that was a different time than it is today. And then guess what? It's not. And you know, it's pumping. And if like this chart, man, it's telling me like look at it.
Easy 6,000.
This is going
6,000.
parabolic. you know people I mean, people still think like, hey, gold doesn't earn any yield, so why would I hold it? I don't understand gold. And then like some people think like, something like this happens. It's as delusional as couple when he was with every breakout telling you this, and then you got another breakout and it's like this. And then sometimes he's like,
Raise
all
your
right.
target by 5% on your
He's
floor.
like, sweep the highs and then this. And then the market goes higher. And he's like, listen, slightly higher, all right, but then this. And then and then
Slightly.
and then listen. And then the market does a higher time frame pullback, and he's like, we sweep the highs. I think we are kind of bullish now, but then this.
Kind of
And
bullish. And then
and this is what they keep on doing. And in the meantime, you miss the entire bull market. This is what happens.
Okay, so Jack, do you think that gold is leading Bitcoin here at all on this move?
I think it's kind of like they will be moving hand in hand in a way, but they are not moving hand in hand on the daily basis. It's like the safe haven store of value issue, right? Again, as I was in depth discussing in BB Discord, I'll just say it quickly here. But shorter term safe haven asset is fiat currency for like the next, first 3 to 6 months. And longer term store of value safe haven asset is not fiat currency. That's either gold or SPX. And we could subsidize, like, yes, it's better to hold BTC than gold. And then, yes, it's better to hold NASDAQ than SPX, right? Like, we can debate that. But like, if we just take these three biggest things, fiat currency, gold, and SPX, then they will depend on the time they are in. So shorter term, that's fiat currency. Longer term, it's either SPX or gold, depending on where we are in which period. Is it a period for growth, or is it period for kind of risk of high geopolitical risks and wars? Essentially, Max, essentially, if you combine the returns of gold and SPX over a long period of time, you will realize that they do the same price, the same percentage appreciation. Like legit did the same. I've calculated, and it's been like 60,000%.
Yeah.
And actually, since the launch of gold has outperformed SPX.
I just
Sorry,
hope that
since the launch of GLD, the spot ETF.
I just hope that gold rallying so hard right now is not the market like sniffing out like economic turmoil and interest
is.
rate. Yeah,
That's exactly what it is.
I
It
mean,
is.
yeah, I guess I just hope it's not.
You hope it won't bring down markets right now. It won't.
Yeah, exactly.
Yeah.
Like it's just happening a little quick, right? Like the move here is really explosive. It's happening fast. So I just hope that it doesn't mean that we have like a month before like emergency cuts come or
Yeah.
something, because the
You
next
have a
meeting
year.
The thing is, look at this, right? So you basically like this is the top of the effectivity growth of internet companies. And then what happens is that you get a sell-off, but gold was not waiting. And then even in this period, you have gold rising, and you at the same time have SPX rising. It's just not rising as much as gold is. And then look what happens when '08 comes. You get a sell-off in stocks, and you do get sell-off in gold, because that's when there is a big problem. Big problems, the market only value them for a quick period of time. The big problems only last for like maximum 6 months usually. But then the market price everything in, and that's not a meme. And then you see that gold continued to rally higher, and it was very hard for SPX to get out of the '08 crisis. But then it did, and then you get the another situation. So you need to get very good at identifying at which period we currently are or are not, and you can get here. You can, and I think you can get very slow growth for SPX, and then maybe pullback, and then the stocks will not do much. You can kind of get like something like this, and you'll essentially get a period of no growth for stocks, while gold in this time will be rallying way harder. Then you will get some crisis. Gold will and we could do it like this. Then
gold
gold.
moonshot to 5,000 an ounce. That'd be crazy.
Now that's happening.
Yeah.
It's always unimaginable, and then it happens. And it happens. Yeah, the hard part is that for commodities, it's happening way quicker. Like the growth is not equal. It's not like 10 years in commodities, 10 years in stocks, 10 years no. It's 20 years of growth in stocks, and then 10 years in the commodities. Then it's 20 years bear market in commodities, and 20 years of bull market in stocks. So it's 2-to-1 ratio. But during this dip, and actually let me slightly could readjust the timings. But like when this big dip comes for for stocks, because essentially there will be some big problem. It always is. You can discuss what it's going to be, anticipate, but something is going to come. And in that time, gold will be way, way higher. Then it does pull back, but it still is in a bull market. Just like here in '08, it just retests price support and then goes for its final stage. It wasn't different here. It was growing a lot. Then you got the boom, and then you got another period of growth. So I'm not like worried that gold is currently moonshotting. Apologies, because stocks can, go up in the meantime. They will just not be going as much as gold, basically.
So you think over even like the short term, right? Like through this Fed pause into maybe the first batch of cuts, gold will
Yeah.
continue to outperform stocks?
Yeah, like I think it's too short of a period to say like the next year, right? But like
Yeah.
over this, we really have to think in terms of decades when it comes to these two, to which you're going to be positioned, and just it's not the time, in my opinion, for stocks to be heavily bullish. It's time to be heavily bullish on commodities, and they've been telling us. They've been telling us, look at this. You are trading the wrong market.
That's crazy, man. Look at that thing.
That's
Look at
cool.
that thing, man.
Like your Snickers, Will likes to talk about Snickers on the bet. Don't pick up the Snickers.
You should pick up the Snickers now.
You
It's
should
very
pick up the
valuable.
Snickers because it's going to be expensive, man.
Will, no comment? Come on, man. That was a soft toss, Will, and you didn't say anything. Nothing? He must be getting a breakfast burrito.
Listen, you can go with anything, but you can see, right?
I was attempting to buy a Snickers, but then I realized I needed to get gas. So it was one or the other, a full tank of gas or one Snickers. So I chose the full tank of gas.
you will buy the Snickers just half the size in a few years.
No bullshit though. I do want to talk on that for like just 1 second, Jackus. Has anybody noticed how they've been downsizing like the amount of food you can get, like in a bag of chips,
So
candy
much.
bar, like everything's been getting just like micro downsized. Like you can tell over time they've just been slowly shaving off like small amounts of ounces off of like off of your candy bars and everything. And that's part of inflation too, I think, in a sense, is once you start to see downsizing in food amounts and prices increasing against downsizing in food, that's how they rebalance it without you actually seeing it, unless you're really paying attention.
Do you know how it's called, Will? It's called shrinkflation.
Yep, exactly.
Wait, didn't Biden make a video about that? I think I saw Biden make like a video calling out companies for doing that. Did I make that up or did he do that?
Hey,
he's always trying to like lean towards people,
bro,
but he doesn't give a shit about
he
them.
made like a real video. Hang on, let me find it. It was
No,
kind of
check this, guys. Check Discord and tell me if it's too much to share.
Super Bowl or something.
Oh my gosh. All right, do it, but do it quick, Jackus. Do it real quick. Do it quick.
Somebody's clipping.
Oh
Somebody's
gosh,
clipping.
that is just something else, bro. Do it quick.
We were talking about the Snickers.
Oh my god.
Oh my gosh. Okay. All right. We did that. That happened.
That's the people scared to bid at 60K. That's what they look like in prison.
All right. Look at this. He actually did it.
Actually, I have a.
You know, when buying snacks for the game, you might have noticed one thing. Sports drinks bottles are smaller. Bag of chips is fewer chips. They're still charging you just as much. And as an ice cream lover, what makes me the most angry is that ice cream carts have actually shrunk in size, not in price. I've had enough of what they call shrinkflation. It's a rip-off. Some companies are trying to pull a fast one by shrinking the products little by little and hoping you won't notice. Give me a break. American public calling on companies to put a stop to this. Let's make sure businesses do the right thing now.
Bro, this
Like,
is honestly the realest thing ever. Like, but chips, for instance, they just fill the bags with air now. They put 5 chips and fill the bag
yeah,
with air.
but like, Will, he is the one responsible, and then he blames it on others.
Yeah,
No, no,
he causes it, and then he's like, you should hurt your business because of my policy. Shut
yeah.
up.
So,
He goes, come on, man. Come on. Get real, man.
Hey, man, that's how you get the president to care about inflation. Shrink his ice cream cartons.
Look,
the
you
only
don't
way.
see this.
I
you
love
don't
how
see
he
this
goes
picture right
as
here?
an ice cream lover, man. As an ice cream lover, I hate to see this.
Hagrid,
How about as the damn president of the United States, you hate to see this, man? Come on.
Tuck, can you see what it says on my picture?
A pack of ground beef is the same.
No, my picture on here on the thing.
the tissue for your tears.
No, the picture, the picture.
Oh no, I can't wait. Let me take the banner off the bottom.
No,
I can't read it.
there is else wants a hat.
Put me up as the main picture on here.
Okay.
So like the share screen thing.
I don't know how to do that.
I do.
Yeah, as Joe.
You see what he's holding, right? He's holding ice cream.
Holding.
And what does he say there? You can kind of read it.
What's it
says,
say?
Else wants a hot dog.
Yeah, there you go. You hit the note. Shrinkflation ain't my fault. Who else wants a hot dog?
Yeah, the products are getting smaller. Commodities are pricing. It's happening, It's happening. And soybean, guys. Soybean. Actually, what's the... Wait. Oh,
It'd be
here
funny
it is.
if one
Here
day,
is
because of the
this
booming
one.
commodities, we're charting soybeans.
Do
like,
you see that?
real
Do you
trade.
see that, Will? The
There's
soybeans.
been alpha the whole time, even though we've been sharing the chart.
Yes, the soybeans are getting to a new era.
Cocoa is nuts, bro. That is like, I'm just thinking about cocoa. Now I'm gonna go front run everybody.
I can't wait to pay like $50 for a Crunch bar. That's gonna be crazy.
Are you not seeing that?
We gotta get in wheat and corn.
My wife does our grocery shopping. I don't handle that. That's way above my pay grade, man. If I try to go grocery shopping, I'd come back with like a half gallon of milk and like frozen Tyson chicken nuggets, and it would not be good. She buys all the nice organic stuff. It is kind of expensive. Maybe she does buy nice chocolate bars. Maybe
organic's not going to be an option for you soon, unless you make $1 billion a year.
No, it is, because I'm just going to buy commodities, so I'll be able to afford it.
Oh yeah, that's true. Can real quick though, can you look at? I haven't looked at it, and that's why I'm telling you. Like corn and wheat, because those are like two of the biggest utilized commodities out there when it comes to food.
You guys see this comment?
Which one?
This one.
Dude, there is no second best. Also, Chip, I just followed your new account because you got banned. I didn't even know you got banned, brother.
Oh, let me know your new account. I want to follow.
I just followed Chimp's new account, man. Because Chimp spoon fed me a Bitcoin puppet. He literally bullied me into generational wealth, is what he did. He bought puppets. I thought puppets were stupid. I didn't understand it. And he bullied me enough that I decided to shut him up by buying a puppet. And then I literally paid like $3,000 for the puppet. And now I don't even know what they're worth now, but it's probably 10x from here or something. Aren't they like almost half a Bitcoin or something?
They're like 25K right now. Yeah.
Yeah. Okay. So he bullied me into making money. So Chimp, thank you, man. I followed your new account. Keep bullying me into generational wealth, whatever the next play is.
Do we have a long-term chart for corn? Actually can't see it.
I think that's like one thing I've never charted is corn. I'll be completely honest. I have no clue. But it's like every commodity looks the exact same. Like
Exactly. That's
you
what
just
I'm talking
overlay
about.
all of them. It's like oil and corn is the exact same, you know?
That's why I say that we are heading to a new era of repricing. Things will get repriced to way higher prices, and oil will be no different. So you better get ready for it.
So basically, everybody that doesn't own commodities or assets that are going to appreciate over the next 5 years are going to have to resort to eating crickets and bugs to survive pretty soon because
That's
they
how
won't be
they
able to
will.
afford food.
That's how they will make you. You know, they will make you to eat the crickets by just
They're
raising the
trying to,
prices.
dude, in the US, Jackus. I don't know if they're doing this in
They
Europe.
are.
In the
It's worse here.
dude, they have all this like protein shit that's literally bugs now. They literally are trying to get you to eat like cricket protein and all this
Yeah.
stuff. It's
They
disgusting, man. Humans are repelled by insects. They're disgusting. It's
yes.
natural to be repelled by insects. You can't
But
convince me.
listen, they are doing even like TV documentary shows where they're like, these crickets are so delicious. You can do them like this. And do you know all these cooking TV shows? They're like,
Yeah.
you can do the crickets this way and add some, seasoning and it's going to be the.
Oh,
I'm
Sounds
like,
delicious,
bro.
Jackets.
dude, I'm eating steak. End of discussion. I'm never going to capitulate into eating bugs. I don't care. I don't care if I have to spend half my income on it. I'm not eating bugs. It's disgusting. And the propaganda, you're right, Jack. It's like how they're trying
Yeah.
to slowly ease
Yeah.
people into seeing it as normal when it's
Yeah.
not normal at all. It's not.
Yeah. I mean, everyone is free to do what they want. I just don't like when I'm being pushed to do it, right? Especially when it comes from if it comes from a private company, all right. But if it's coming from a government, I mean, fuck you. And if it's coming from a private, quote unquote private company that's funded by the government, which is very common nowadays, so that they can say like, oh, it's not the government funding these programs. Well, the government is funding these private, quote
Yeah.
unquote non-profit organizations, and then it's being
Yeah.
pushed on this one. So, anyways, that's another discussion. But yeah,
Because
these
they're
are
all going to be, all the politicians will be eating steak and foie gras at their meetings, and us common folk will be eating crickets. Steak for me, crickets for you. That's how it goes. That's
yeah,
what they want.
it's capitalism for the poor, socialism for the rich, basically.
Hmm.
Listen, I do hope you will enjoy spending, the next 11,000 days in poverty.
Yeah, see, you can only find this here on Because Bitcoin, guys, and that's the truth. Like, you can only find this here. Chimp Phone says, I love tuning into my favorite crypto gang, and they are talking about crickets and charting soybeans. I mean, there is no second best, and that's what we mean when we say that. We talk about crickets. Is there cricket futures yet? Can you trade? Are crickets a commodity yet?
There has to be.
There
bro.
has to be insect-based commodity indexes somewhere, right? They have lean hog. They must have cricket. That's when you know it's completely over for the
Well,
common folk.
we had somebody in our Discord, I think it was Radiant, that was trying to short like fruit crops because of an outbreak in like locusts. I thought that was kind of cool.
That is cool.
This is actually very interesting. You had this is the Dow Jones Index measured against US CPI, and while the price was ranging back then and then going up in the bull market. All right, let's actually do this so you can see it.
This is a conspiracy, Jack. It's those trend lines are made up and they don't work.
Yeah, it's totally random. So why they told you that you had a raging bull market here, right? You had sideways and then raging bull market. Your purchasing power was the same or worse. You had to spend legit, 20 years here, 20 years, 30 years.
Jack is on the bottom chart. Can you take out your highlighter and mark with a dot? Yeah, right there. To the left, like that, the high before the sell-off, mark that right there. And then mark when you had the same purchasing power as that point to the right. Right there. Yep, up. So although it went up, you didn't actually have more purchasing power until that much further along because of inflation.
So it took 30 years until you had the same purchasing power if you hold Dow Jones. But if you were given the alpha, as the BB told you, instead of holding through this bear market, you saw probably, if you were smart, what's coming. You bought commodities, and guess what? You were in a bull market, all right? And then you saw, and voila, look how it lines up. Dow Jones against US CPI, the purchasing power, you swept from commodities into the equities, and you started a new bull market. Voila! Look where this stops. At the bottom. Surprise!
Who could have foreseen?
Yep. Actually, let's try this if it works.
Jackus, I just gave you a good commodity ticker in the private chat.
Oh. What is it? Oh.
Check it out, Jackus.
I'm not sure if it did it. Oh yeah, it did. Right? So
is that really a commodity you can trade?
Yes, it is.
There's no way that's real. Is that
no,
for
it's
real?
real. I'm looking at the chart right now.
Wait, where have you posted?
Dude, it's just sugar. It's all that is just
Private
sugar,
chat.
right? It's
Private
just sugar.
Sugar beta. It's a
It is.
sugar all
It is down only. I will say that it's down only.
Cotton candy futures. I mean, it's just sugar is what it is, but
Let me make a little pair. We'll see what's going on here. Oh, it's going up against sugar.
Yeah, anyways, if you bought if you were holding, it was good to hold stocks after Great Depression. Then it was good to switch to commodities for the next. And look, this took 10 years. All right, this took 10 years for commodities. And you think that this cycle, it's going to take like 2 years? No, it's going to be way longer. This is this. So you want to be flipping from one asset to the other, and you have many, many times you have like 1 or 2 year period, and you guys know that I've been calling for it, for the past 2 years that the decade of commodities is coming.
you think it could be that long though? Because that's how many with futures on Coinbase?
Yeah, just announced.
What's the chart doing? What's the chart doing? Are we pumping?
I don't know. I haven't even.
We're up 7.5% today. That's interesting. Jackus, do you really think that how long was in that chart right there? How long was Dow Jones downtrending? You have it highlighted there against US CPI. How long did that? Was that 30 years, 25 years? But before it actually went to make a new high, right? Not just bottom out. So to the right, it was
that was 30 years.
Do you really think we could see a repeat of that where Dow Jones adjusted for US CPI doesn't make a new high for 3 decades from our current peak?
I'm not sure if that's the case, but look, for example, so each period will be different. What's important to understand is that it's going to be some period. So for example, from the year 2000, it took 14 years, all right? So you never exactly know how long it's going to be. Just I think that you want to know that it's coming, basically.
Yeah.
It's actually interesting. Let me actually see SPX here.
I think that it will not take 30 years to recover just because of, at this point, we're at a much higher rate of money printing and
You see,
You know, just kind of the overall velocity of the market. But, you know, like the type of drawdown that we've seen in the past, we could see something like that just probably occur in a much shorter time window. Something I've thought about too.
so as you can see, SPX is currently trading in a, one would say, bull market, but their purchasing power is actually has even broken the all-time highs of 2021.
Yeah.
And the thing is that it can continue go higher, but if the US CPI will be going, because the currency supply will be getting expanded, which I think it's going to be, then what you can get is like you could even get something like this, you know, it doesn't matter, but you know, maybe you are getting a repeat of this. Who knows?
Yeah, that would be painful. This chart looks bottom, man. Honestly, like this looks
Kind of needs to be.
if you yeah, that's good right there. I was gonna say you could go to MEXC. I'm pretty sure they have the full chart. But yeah, that looks good. See, this to me feels like the first major sell-off for WIF, and then we look back on it and like it just goes up 10x from here, you know.
Probably needs a pretty long consolidation if it's going to rip a 10x out of like the $1 to $5 range, basically.
Jackus, would you be so kind as to pull up another chart on the right side? I want to show you how I'm comparing this in my head. Can you pull up Sol from last cycle, like before last bull market?
Oh no, we are not showing that.
Yes. We have
We are
to.
not showing that. No. We are only showing that to the people.
Oh, you think it's
to
too
the
much
people
alpha?
of BB? Yes, I think we showed enough today. What do you
We
think?
may have shared too much. I don't know.
What does the like button say?
We better be cooking today because
300.
hang on, because
30
we
people should be 200 likes.
250. We're doing pretty well.
All right, I suppose people like the alpha.
That was you were cooking, Jack. See what happens? You cook that. I mean, we had to bother him once, but when you get that Chef Jackus cook session, people can't help but like. They're weak to the like button, man. They just submit to it. When you cook
What
like
I
that,
what I like is that nowadays we don't even have to like put because they learned that the longer it takes to reach a certain like button ceiling, the less I have time to cook. So instead, they start pressing the like button during the cook session.
fuel.
You want to take the chart from here, Max? But don't show that whole thing.
You don't want me to show this whole thing, really?
I don't.
I mean, that's what if we got to 300 likes, Jackus? Then how would you feel about that if we got to 300 likes?
I just feel responsible to the people in the BB Discord, and I just want to reserve that information for them.
That's fair. All right. Well, I do kind of agree with you, honestly. Oh man, I would like to show. It looks nice.
It is. That is alpha, man.
It is alpha. I want to share it, but I'll drop it in the Discord. Maybe another day.
Remember when I was first mentioning that about a month ago before the drop, that it's possible that these charts will do it, and then people were like, I don't know.
Well, if you speak bearishness,
and now it's there, and it's so obvious that it's happening, and people will be like, I don't know if the upside is happening. Like back then, they were thinking, I'm not sure the downside is happening, and I wasn't sure either. But like, I was like, if it counts, you know, it's probably we are this early probably, and you know if that happens, and then.
And That's a ridiculous amount for a dog with a hat coin.
There you go. That's your hint. That's all you get. All right, Tommy, take us out, brother.
All right. Thank you guys so much once
Maybe
again.
Tommy, before you do, can you put on my chart? Or I can do it myself. Oh, good. Listen, this is also very interesting. So this is gold versus US CPI. And what you are getting is a breakout. I wouldn't fade it, and you are getting the same on silver, basically. You know, I was sharing this that we are going to get the breakout very soon, and we are. And you know, this chart is coming here. Maybe a local bounce. Maybe this is like when it comes here, this is a local recession, but commodities will then break out.
It's incredible that these trend lines work the way
Yeah.
that they do, well adjusted for economic data. It's unbelievable. They actually trade better when adjusted for CPI. Like that chart looks better to me than the normal one.
Yeah, it's crazy, isn't it?
Yeah, it is.
All right.
All right, Lance, take us out, brother.
Tell me time.
All right, guys. All right. Great show. Once again, as always, we're going to see what the market provides us here into the end of the week, but we hope you have all had a fantastic Thursday. Really quickly, going to plug the BB Academy, which is a trading course put together by the team here at BB. You get to hear something from everybody, some more than others, of course. But ultimately, great content. We worked very hard on it. Spent about 8 to 9 months developing that for you guys. So if that's something that interests you, we do have it at a heavily discounted price right now. That is not going to last forever. So I'm just going to continue to urge you guys to pounce on that price now, because you could blink and overnight the pricing will likely increase by a lot and in a very short period of time. So once again, going to plug that discounted deal for you guys, but very limited time. So make sure to pounce on it. Once again, you get to hear from everybody on the team talking about a little bit of education and markets. But excited for you guys to see that, of course. And yeah, to touch on our programming here as well. Reminder that Market Check will be back same time as every weekday, Monday through Friday, 11 a.m. Eastern time is our typical start time. As you guys can see, we like to have a lot of fun cooking together, talking charts, technicals, markets. We have a lot of fun. Will's Outlook makes a lot of out-of-pocket jokes throughout the show. We always have a lot of fun here, guys, but we hope you enjoyed it, especially if this was maybe your first time as a Market Check viewer. I know we had a few first timers earlier in the week, so happy to have you guys here if you are new, as well as, of course, returning, right? Just as well, we have our flagship show, Market Talk, which is a Twitter space hosted by the legendary King Wabi. They talk markets, meme coins, macro, everything in between. We always have some really great guests on. So make sure to tune in for that as well. Timing may vary, but it's always communicated through our Twitter. So stay subscribed to make sure to be notified, not just when we schedule it ahead of time, but also when we go live. But that's it from us, guys. Y'all have a fantastic rest of your Thursday, April 18th. Fantastic rest of your week. We will see you tomorrow morning, unless you're a Giga Chat, in which case we will see you this afternoon for the closing bell. But once again, y'all have a great rest of your afternoon, and stay safe. Thanks again.